Hi there traders, this is going to be a very quick video. I would like to point out to a potential trade opportunity that's coming out on USDCAD. What we have here is a 5 pip fixed Renko chart for the US dollar, Canadian dollar. As you can see, price has been in a very steady uptrend for the past couple of sessions. You've got price hit a low near 1.3011 and then rallied straight all the way up towards 1.3356. So you've had the steady uptrend with little to no pullbacks at all, and as they say, what goes up must come down. We've had a bit of a consolidation between 1.3356 and 1.3326. As you can see, the price action has been chopping around sideways, and this potentially indicates that we could expect to see a breakout in the near term. So you could expect a move to the upside, or a break below 1.3326 can see a strong correction to the downside. So while it's hard to expect where prices can go on a breakout above 1.3356, what we do have here is a strong divergence level, and we could potentially see a correction back down towards 1.31314. So maybe you can round it off to 1.3132 or maybe 1.315, which looks even better. So the trade plan here is to wait for this consolidation to complete and possibly look for a breakout to the downside. Now, if you're brave enough like me, I would be recommending a short position near 1.3326 and targeting 1.315. And the stop loss would be at 1.3356. Maybe add a couple of pips more to just to make sure that your trade isn't stopped out. So in terms of the risk reward, we're looking at a 30 pip risk if you go short at 1.3326, and you're looking at a 195 pip reward if you're going to target 1.31314. So guys, there's nothing much to do in USDCAD right now but to wait for price to give us further clues on which way it's going to break out. In terms of position management, I would probably suggest to book your profits near 1.325 and potentially move your stops to break even, and let the remainder of the trade towards 1.3131 or 1.315 to trade at no risk at all. Bear in mind that as with all breakouts, you can expect to see a rebound once again. So if prices do break out to the downside as we expect, and our short position is in play, then you could expect a move back to the upside. So this is something that you need to be careful about. So place your stop losses accordingly. Don't move them a bit too soon or a bit too slow, because there is always a risk that prices can make a fake out, break out to the downside, trap all the short positions like ours, and then rally back and move to the upside. So that is why I would recommend a stop at or above 1.3356 when the short position is triggered, targeting 1.3140. As mentioned, you can look at booking partial profits. You just need to look at the chart to your left side. You've got 1.33, which could be a level from which prices could rebound, and following that, you've got your price level here at 1.317. So maybe round it off to 1.32. Okay, so you've got your first level at 1.33. Your second level at 1.32, and your third level at either 1.315 or 1.3131. So either ways, USDCAD probably play to the downside if price breaks out lower, but at the same time be careful of a fake out, which could potentially catch the shorts and squeeze them all the way up back to 1.3356. To the downside, the targets are 1.3131. So I will cover this trade once we hit the target or maybe the stop loss. Until then, enjoy, and if you have any questions, feel free to use the comment box below. Have a good day.